Hello friends, today let's go deeper in talking about closing disclosures. So page 1 will look like this. It will be attached throughout on the screen for you so you can see it. Okay, so let's start with it. What is it's like difficult, but it is not. It's just not a regular pattern which we are used to seeing on invoices from, like, say, a merchant, which just tells you credit, these are your charges, and credit minus charges, this is your balance, and if charges are more, then you owe me this. So basically, it is just the same. Think of it as credit and debit. Okay, that's it. So let's make it simplified. On page 1, it says the home was bought, whatever the date issued. It will have the your loan information, the title company name, the property address, and it will say the sale price. What is the price of the home? So price of the home here for the example is $235,000. The page 1 is simple. It's nothing but the loan information only. So it's saying you have taken a loan of $188,000 at the interest rate 7.5%, and your monthly payment is $1,314.53. In the middle, it says projected payments, and then it gives you, because the person has decided to escrow. Escrow means they are going to pay every month their monthly insurance and monthly property taxes, which will go together with the principal and interest payment and go to the lender. Total payment, it says, is going to be $1,903.22. The difference between the principal and interest and total payment was your escrow amount. Then it says, what is your closing cost? Closing cost is $10,069.42. So that's what you have spent to get this loan, which includes 3 basically payments: the lender, the title company, and if you have bought any points, etc. It may even show a seller's credit, but it will tell you what is it that you are paying to get this loan. It says cash to close, $52,139.30. What it means is that payment is that closing cost plus your down payment. So that's the cashier check or a wire you would be taking to the title company. Just one important information. Nowadays, I'm seeing a lot of title companies are not accepting cashier check. There are cashier check fraud also, and there are wire fraud. The best thing I recommend, you call the title company yourself, not through email, not through text, on phone, get their banking number, routing number, and they have sent you this paper, what is your cash to close, and then you wire that amount to the title company 24 hours before, so that way funding can happen next day and then you can get the keys. Page 2. So page 2, on the top, basically you will see on the page there are 2 sections: loan cost and other cost. So what is a loan cost? If you see, it will say here the origination charges. That means this person bought the interest rate down. So whatever the interest rate was, in order to bring it to 7.5%, he paid $5,450. Okay, that's called buy down points. Okay, so if the interest rate is 8, and suppose you are comfortable keeping it at 6%, then you can buy down 2 points. Lender will explain you detail of it. Then there is this fee of the the broker compensation or whatever it is, and then it goes about what is the lender fee. So in this case, I'm seeing all the lender fees are paid by the lender. So basically, he is paying you back. Maybe the buy down points costed less, and that's why they're giving you that as a credit. Or maybe that's their special. Find out. Usually that cost is yours, the borrowers, not the sellers. But here you see paid by others, and there is this in the bracket, it says L. L means lender is paying it. If it says S, That means seller was paying it. It's all part of the negotiation when you write the contract. It says your total loan cost is $5,450. That's it. Other cost is your taxes and title company fee, prepaids. So what is prepaids? That's your other cost. Prepaids is the account where you will be paying property tax, property insurance, money, whatever is the annual, and they actually break it down with your monthly payment, but they still keep 2 months reserve typically in that escrow account. What is the escrow account? Call it a savings account, which is safe for lender to keep it in case you miss your payment. Because property taxes or property insurance, if you don't pay, lender can call it a default, and property tax, again, if you are not paying it, you will be in a big trouble by the county and the lender, and you can go in foreclosure. So they just try to keep 2 months extra. So all that breakdown will be here. Now title, they have to charge the title policy, right? You want a title insurance. Title insurance, usually, I would not say now that seller pays. In the market today, anybody can pay. It's also a part of negotiation. Sometimes buyer pays a policy, sometimes lender pays a policy, but there has to be a title insurance to protect borrower after the sale is executed or conveyed. You don't have anybody knocking on your door that you owe me this money and I'm going to take over your house. So this is your title insurance. So make sure, ask your title company who has written your title insurance, because there are many title insurance company, and keep that number handy or keep it in your contact list or whatever. If something like that ever happens, you are covered with the title insurance policy. They also have their own fee. They will record it with county and city. So there will be some recording fee. There will be homeowners association transfer fee when they transferred it from sellers to you. All that other cost will be part of that. Let's look at what the total expense is, $10,069.42. Remember on page 1, you saw that number. This is a detailed breakdown. Let's go to page 3. Page 3, it talks about on the top calculating cash to close. And there are 2 columns on the top. It says loan estimate and what your final cost is. By RESPA law, lender is required to now put this down and show it to you that what he quoted initially when you gave the loan to that lender, what your estimate was and what actually it came. So in this case, they are $2,000 less, they're good to go. At the bottom, it says summaries of transaction. That means there is a borrower section and seller section. So let's talk about borrower first. So borrower is on the top part, line 1 through 15. That is your cost line. Then again, they're the same numbers per section L, which is your credit. So all the cost and all the credit. What is the credit? If you are getting any lenders to pay towards your closing cost, the loan you are taking actually from the bank. And the third important thing is property tax credit. That's where people get confused. It's simple. Property tax credit you get from seller, because suppose this transaction happened on the 4th month of the year. Well, 4 months he lived in, and now you're going to take over the home. So property tax bill comes at the end of the year, and where are you going to go look for the seller? Maybe he moves out of country, out of state, who knows what, right? So what happens is, based on the tax certificate title company gets, they will get you a credit for the seller's portion of the property tax and give it to you. Remember, that's not your money basically. And if you have escrowed it with lender, then of course lender will keep it in that escrow account, because that's what they are doing. They start collecting it from January. When December comes, the statement is there. They go ahead and clear your property taxes. So it's very simple. Don't get baffled with it. Don't think, oh, I got extra credit. It's not extra credit. Same way for HOA. you will owe seller because seller pays in the beginning of the year the entire year's homeowners association fee. So he may ask you to prorate and get a credit to him. So some money out of that homeowners association will go from your account to him. Okay. What is now the final number? Cash to close. It says $52,139.30. What does it mean? It's a down payment plus your closing cost, right? And on this final paper, it talked to you what your cost was, how many credits were there, whatever is your balance plus down payment, that's your cash to close, which you are supposed to take to the title company, as we discussed before. Let's go through seller's transaction. Sell price of the property was $235,000. And then it talks about their, see, that taxes, the prorated. So that goes to you as a credit, which you will see it in the section L. Now, due from seller at closing is the amount, they write it, and then they say whatever he owed to the bank. Suppose he still is carrying a loan, then that will be deducted, right? So that will be deducted. Anything he gave it to you will be deducted, but he'll have that credit of the loan, which is the total amount what lender pays plus your down payment. And then whatever is the difference, that's what that they receive. In this case, it says they get $217,672.82. Means it seems like they had paid off their home and basically they are giving you whatever credit, but most of the chunk of the sales price, they're going to take it home. That $217,672.88 goes to seller's account. Title company will wire everybody's portion of fees, the funds, anything. Just one thing to say, if you are shopping for home insurance, which you will be during the process of the loan, and the home warranty, right? Those two, you just get the contact and get their email and then pass it to the lender. Lender will put that cost inside your closing cost, final closing disclosure. So, and they will send them a wire. So that way you don't have to do anything. Once you're cash to close, all you're doing is wait for the keys and enjoy your home. I hope I have explained it as simple as I could think about. And it's very simple, but if you have question and if I've forgotten to cover anything, please, I am Sonal Shah and you're watching my YouTube channel. Subscribe to it and just write a comment and I'll be happy to cover it. If it's a broad inquiry, I may do another video. Otherwise, I can contact you and give you the answer. Let's look at page 4 and 5, not to ignore it. Page 4, of course, there are no numbers, lot of verbiage, but don't get afraid. It says loan disclosure. It talks about is that assumable loan or not. It will mark, this one says no. Then it says what are the features and everything. It does not have them and features. Then it talks about negative amortization, whether you can make a partial payment or not, and what is your escrow amount detail. Read it, everything will make sense to you because if it is your transaction, you know what you've discussed. Page 5, again, a lot of verbiage. It says loan calculation. This is important, I feel, for the people who are number savvy and who wants to pay off their loan early and have a plans for that. This is very important. It says your total payments on your $235,000 sales price of the home, you are going to make $478,680.80 payment. So you rest of that $235,000, the balance is what? Interest. You are paying to the lender. And then it says what you finance. Then it says what's your finance charge. And then it says APR. APR is nothing. That's not your interest rate. Your interest rate is 7.5. But this 7.803 is that one-time cost which you pay towards to the title, to the lender. So they are supposed to give you that interest that for that one time was 7.803. And then it says the total interest percentages is 151.714%. Now, I know a lot of people call me, hey, Sonal, what I pay big amount. I get a bonus, I get inheritance, or I won the lotto, anything, or you sold a house, investment property, or another house. You can make a big payment to your lender and then talk to the lender. They will reduce your payment for a small fee. Contact information here, it talks about who is the lender, who is the mortgage broker, real estate broker, and settlement agent. So here all the people's address, name, whatever, and I guess so you have everything on the tip of your, in the tongue or tip of your access to your computer, because then you save this. You save this because this is an important paper. Another thing you will get is deed of trust. That means that this property is now transferred to your name and there is a deed, and what does deed of trust clauses are. We'll do another video for deed of trust, but that's the recording. It's available even at your county office. So if you lose it, no big deal. Even title company can pull it up. Any title company you ever lose that paper, but that recording, you will receive it after title company sends it to the city, county, and they record it, and you will get a sealed, signed deed of trust. That's about it, guys. And I think I've explained everything. I hope it helps you. I wish somebody had explained all this to me in a simple language. When I bought my first home, I just didn't even understand anything. So thank you, guys. I'll see you next week.